Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So it's Thursday. We've had a week of earnings. The Nasdaq's been up 14 out of 15 sessions or 15 out of 16 sessions. So today, when you had a huge gap up on Facebook earnings, it was not a bad spot to trim and trail. I think I came in with 5-6 longs. I always try and sell some into strength, even if it does go higher, especially after multiple days, and then try and figure out what the next composure is. Then usually, just to tell you a little bit about the process, then around 11:30, what I do is usually if I have 5-6 longs left, I put a stop in at the low of the day just in case something happens, because today I had to go to the gym and then I had CNBC at 1 o'clock, and you know what, it was a good morning, and I was like, you know what, I'm comfortable with this if things are normal. If not, I'll get stopped out and I'll figure out what's next. So all of a sudden it's 12:45 or 1 o'clock, I'm getting mic'd up, they're putting my makeup on, and I see the Nasdaq down 25. I'm like, woo, we went from up 30 to down 25. Outside day in the Nasdaq, that's probably something that could take notice to, day to take notice, brushback pitch, however you want to call it. And if you've been following me for years, you know that I have like a process on how I sell or how I judge the day. So this way you could be out of the way and figure out how to test lower levels. One, usually if I'm long and things are gapping up, like today I was long BABA. It was up like $1.25 in the morning. I'm like, I sold a little bit. It was up $2. I sold a little bit more. And then it developed the range, and I'm like, you know what, now I'll trail the rest and put a stop in. Okay, it could have went up $7. I didn't care. I had my levels, whatever. So, what you could do there is, you sell into strength, and then you could, put a stop in at the morning low, which is what I did, or when it goes red, because usually, once the stock goes red, it could go down, and you never know how low it's going to go. So price discovery, you wait for a new pivot low, and then you could trade versus that. And then if it happens to go red and goes down and then goes through a prior day low, then usually, that the computers start pressing because they think that we're in a big correction mode, and and then things start to tumble, which is what happened from 1 o'clock till 2 o'clock until you finally hit a pivot low or a stretched low, and then everyone takes a deep breath, and then you figure out what kind of bounce we have. Some guys might have been buying in the hole and got made their way out of it. Some guys might have got out and then shorted a bounce, and it went further than I think some people would have thought if the bears would have full control. And anyway, there were a lot of different ways to navigate it. For me, I like to put stops in for when the trade changes, and I also like to adjust around pivots depending on where we are within a range. And when you're at an all-time high, it's hard to buy the first dip down because you don't know if a day one's going to turn into day two, day three. So usually I just get out of the way, and then I wait for some price discovery, and then I'll also have points of reference to use. So anyway, so go to the Qs first. Qs gapped up after a big move. Here's where you cleared the descending channel. This is where you had your double bottom. So this was important. This was important, and it held, and that was when a portfolio approach started. Then you had a breakout trade above here. And for today, it went above a high, okay? And basically, once it went back below this 144.95, we also call that a red dog reversal. Typically, not when it opens up and goes through, but that would be your spot to say, hey, we're not holding a momentum level. If I'm in this for momentum, I got to get out. Then some people say, hey, not only did we not hold the prior high, we took out the low of a narrow range bar, which was right here, so that's another spot. So if you got out here or got out there, okay, you're out of the way. Or could have been the same thing, like you go to the Qs to see where it was, right around 11:30. Okay, you had your gap up, okay, going sideways. This could have been your stop right here, because there are people who get short for a gap fill. So one thing was when it got really tight, it broke below it. And then this could have been your stop right at the start, right at the morning low, and you never know what's going to happen. Here it filled the gap, then you had a bear flag, then it broke below yesterday's range, and boom. Then look here, finally you see a wide range bar that kind of engulfed the last one, showing that the bulls took back a little control, and then it didn't fall back down to those that held higher, and then you had a little bit of a bounce back to where this little flag breakdown was. So there's definitely lots of ways to navigate. Let's hope that volatility continues and this wasn't just a one-day wonder to get people out of their names, and then tomorrow we open up above it or whatever. So anyway, that's how you do it. I'll show you my thought process on BABA just because a lot of you guys traded it with me, so on how I navigated it. I'm not saying I navigated the best, I'm just saying this is kind of my thinking. Okay, it's my thinking that keeps me risk averse, that keeps me from making big money, but it also keeps me from losing a lot. So here is where I bought. Okay, I bought on Tuesday small. Then yesterday I added. Okay, why did I add? Because you had a nice flag pattern that broke above, a little inside range. Kind of the same thing that happened here. You could have bought versus 21-day and added when it broke above there, so that's what I did, and it was my biggest position overnight. Then this morning it opened up by, 9, whatever it was, like 9, maybe 850. I'm like, I sold a little bit above 157, and then I sold a little bit of 158, and then I said I sold a little bit 159. I'm like, now I got to hold some, okay? And when I left, I was like, you know what? I don't think Bob is going to be in trouble, but I might as well have a stop just in case. So I put my stop at the gap low, which is right here. I figured I was okay. I didn't think that was going to happen. But here was your, first opening range. I took it out. That went to the upside. This was maybe one spot to say, hey, maybe it's getting weaker. So I left right around here in this spot, because I went to the gym because I had to be at CBC at 1, and I put my stop here. So all of a sudden, what did it do? Stopped me out, and I lost on my last tier. Made on this tier, made on that tier, and I said, hey, I'm going to hold just in case it goes sideways, and then at some point in the afternoon, take this out. No, it broke this, and then it broke that, so my stop got me out, and, I didn't get, it saved me $5. Wow. And then look what happened here. You had your first little, you had a little bit of a reversal bar here, gave you a rally back to the 8-day and came below it. Here, very powerful bar. Changed the short-term direction, then it actually reclaimed the 8-day, gave you a push back here, and then closed at the bottom third of the range. So for me, I'm not in bobbing now because it became loose and wide. That's a term I use all the time too, loose and wide. I like tight, because tight, you have points of reference, and when the range resolves, you could grab more and you have your wrist defined. But when it gets loose and wide, then all of a sudden, it could test areas, and A, you don't want to be maybe short against it because it could push it higher, or B, if you go home long and it rallied $6 off the lows, it could always open down a few to retest it and hold above it. So I'm like, you know what? Now I'm just going to be back to trading a little bit and let the market do some price discovery. Maybe it means nothing. Maybe it means something more. But anyway, that was how you could have navigated BABA. And then, Google is in the penalty box, and so it did kind of what it should have done. What do I mean by that? Well, you had a gap here, and it did not fill it, so that shows its weakness after not getting above the momentum level. And then this was your pivot. If you were in long today versus 960, because that was your only point of reference, broke below 960, you got out of the way. There are some people who might have shorted 960 saying, hey, there's an unfilled gap here. It didn't have enough to break out above earnings. It's still above the, the June lows. And then, it went as low as 937. So now this, to me, is just like a C setup. It's not tight. It's very loose and wide. You have a big channel, and chances are it's going to be in this big channel, for quite some time. You know what? Let me get into Amazon. Let me see where it is first. Guys, do you know where Amazon is? It looked like it missed. It went down to support and bounced a bit. So let's see where it is now. Hopefully it's not green and I'm missing a whole big trade, but I doubt it's doing that. So Amazon is down 26. Okay. So I tweeted out to Redler All Access just saying, resistance is 1,083. That was the pivot, and there's micro support at 1,015 to 58,994. I personally, when it came out in my swing account, I put orders to buy 998 down to 990. It never got there. Okay, it got to like 1,001 and bounced, and then I was trying to trade it, and I didn't even touch it. I was trying to just be cautious. So now here you are with Amazon at 1,020. Chances are, it's going to be a little loose and wide now. Here you also had, somewhat of an outside move, and now, here is here's the prior breakout, which it's a little bit above. So now it's going to be back to a different type of trade, unless I don't think it's just going to go up and go green. But even if it does, I think people might have gotten a little shaken up now. But anyway, here is when I was focused on it as an A trade. Remember, I like tight setup. Well, here is getting tight, so I was in tier 1. Here is when it broke above a level, which is a pattern. That was my tier 2, and then I think I sold it into that. Okay, up here, very hard. And now with a loose, wide range, we'll see what happens tomorrow. But it's going to be a different trade. No longer a breakout trade through a channel to the upside. Now it's a where does it hold? How long is it going to take to build a whole new pattern? And you can knick-knack it, prior. Then the same thing with Facebook. Facebook was a little different than Netflix. Okay, I actually traded Netflix on the day of earnings, put a 5-minute low in. If I remember correctly, 174. I'll get to it. And then grinded higher and closed near the highs of the day and had follow through thereafter. So today, Facebook put in a low. I traded a little bit, made a little bit of money, and then when I left at 11:30, I said, hey, I'm going to put a stop in at the gap because that's the only point of reference I know. It gets below the gap, it can go anywhere. So with Facebook, this candle looks different, right? But it also had a bigger run than Netflix. Okay, it didn't close in the dead lows, but looks different than Netflix's candle. And as a trader, you have to figure out the difference. Netflix opened up, put the low in, and grinded up all day, and then gave you a little bull flag, and and then made a little higher high. And then today, just like everything else, became now loose and wide. So now it's going to be a different trade. But for that 3-4 day time period, you could have put your stop in and you made some money that day. So for Facebook, what did I do? Very similar strategy because I'm a creature of habit. You go to the 5-minute chart. Okay, pulled in a little bit. Okay, not a whole heck of a lot. Put a low in here. So right around here, I bought it and I said to Redler All Access, I'm buying some Facebook verse 172.40 because that's the only point of reference Came back through the highs. I actually said I sold some, and now I'm keeping a stock at the low of the day. So right around 11:30 I left. Said I'll put my stop in because if it's like Netflix, it's not going to break that and it could grind up and I can make some money at the gym or at CNBC. Instead, I got stopped out. But better than getting stuck in that and then maybe calling the office and being, oh my God, get me out here, which would have been a hell of a lot lower. Instead, I said, this is my setup. Buying it here, trimmed a little bit. Now I'll hold it if there's continuation like Netflix. You know what? There wasn't. It was different. Broke this, so I was out. And now, we'll see what happens tomorrow. We'll see how it opens. At this point, it's a different type of trade. Okay, we'll see if it could, you could trade versus this. How many days does it have to go inside? And the trade changed a little bit. So the trade always changes, but you have to have a process on how to adjust when that happens. It could be selling some strength, and it could be selling some when it breaks a momentum level. It could be selling some when it goes red. It could be selling more when it breaks a prior low. And then once you did that, then hey, now you're in price discovery mode. You could test lower levels, like the S&P cash. Didn't fall apart and came into a level that should hold the first time. What do I mean by that? This was your prior area, right? This was the gap, got filled, held above the 21-day. If you were looking to see what could hold this area, I think I went over that on Trading Nations too. I said whatever it was, futures now, like 2460-ish or 2464. And you know what? It's still above this spot. So if you got out when it broke this spot, which is your 3-day range, remember, I'm like, if you're actively long, be actively long verse 2474, you could have got out of the way, and then you could have tested, a lower level after it made a spike lower, a wide range bar, etc. But chances are, if you didn't get out of here, you might have been in so much pain with the amount of positions you have, and you could have hit out the bottom versus getting it out at your upper level and figuring out where it could, where it could hold. Well, anyway, now it's a bit loose and wide. You have 24.59. This channel might get bigger now. We'll see what happens, but all in all, kind of changed things, or at least it gave a brushback pitch where a guy's like, okay, I don't want to get caught in something like that again. Let me have a little less exposure, a little less size, and a little less positions, be more specific. XLE, closed well. It's cute that Exxon and Chevron have to have their earnings tomorrow, but maybe it'll be a catalyst. Here is your red dog reversal. Here is where I was on CNBC, I think, and I said I would be a buyer versus, and I made a little bit of a move, came back, and then yesterday I bought it back, and now it seems like it's clearing this spot, okay, for a move that could take it perhaps to here, but it's going to, you're going to have to have Exxon and Chevron act well. It's kind of above this spot and holding above it, so it's a little different, not extremely different, but something that, when the market pulled back, this actually got some flows, so we'll see if that continues. That's why I'm in some of that still. It's almost like, instead of buying the VIX, I bought the XLE, but whatever, we'll see. So all in all, today for me changed things a little bit. If you're a member of the VTF or RA, you know that I've been holding 6, 7, 8 longs probably for 2-3 weeks ever since we cleared that descending channel. 1 or 2 days I got down to 2 positions and then got back in after price discovery. So now I'm down to 1 position and I sold most of my options, and I'm going to be back to tactical trading mode to see if I could rebuild up based on what happens next, instead of being in the way of what happens next. If we gap up tomorrow and then these stocks are higher than where I got stopped out, who cares? Okay, but if volatility does pick up and today means something more than just a few hour wonder, I'll be out of the way and I'll be able to tactically trade and figure it out. Tomorrow I will be on my way to the Hamptons with the wife. It's only 2 more weeks, so I'll have the kids away at sleepaway camp, so we got to have some fun. So I will not be doing a video. I don't do videos on Fridays anyway. I'm usually trading from short hills. I will be in the morning. So we'll go over levels, and I'll tell you, like if we open down, I'll be like, S&P futures are down 4 points. Let's see, you have a lot of room up until Thursday's low, so don't be too fast. Or see if we could, if we open below, do we reclaim? All those things. That is like a Redler language that if you learn the language, it'll help you navigate some of my quick tweets that sometimes I need more thumbs and more room to really explain myself. So I would say in the next week or two, maybe 2 or 3 weeks, I'll do a webinar to go over it if you're not really familiar with my isms. But I think if you've been watching the show for a while, you kind of understand the drift. You know what a red dog reversal is. You know how to use sell rules. You know day count rules. You know tiering. You know what type of patterns I look for and where I usually focus my energy, and what portfolio approach means versus what tactical approach means, and what a shot across the bow means or a brushback pitch like today. But sometimes a brushback pitch just gets the bulls away from overcrowding the plate because we got too comfortable. Or there's more hard pitches to come where you have to be a lot more specific and a lot more focused. Anyway, we'll see what happens in the morning. Have a great night. It's Thursday. Enjoy yourself. Summer's going by fast, and I wish you the best. Have a good one.